All right, guys, what's going on? This is Reality on Tape. This is going to be my 20th episode. On this one, we are going to get in depth when it comes to credit. I have Jordan right here that has a couple clients. He has fixed many people's credit. We're going to go ahead and go, in depth in that. Tell me a little bit about yourself.
Man. So I'm a local Houstonian. Love Houston. Born and raised Houston. As far as credit, so before credit, I did debt consolidation and consumer sales. So I work with people with consolidating debt, loans. I did that for about 5 years, and I wanted to get on the other side of the business. Like I realized that really wasn't helping people, so I got into the debt validation world. I've been doing that for 5 years, and now I take my own clients under Next Level. So.
Okay. Is there a specific company that you work for? How'd you start in the credit world?
Man, honestly, it was crazy. By accident.
By accident?
Yeah, by accident. This was around the time that COVID happened. So before COVID, I was a supervisor for a branch that did that consolidation.
Okay.
We got furloughed, and we got furloughed, and I was home for like a year. Yeah. So I did like some other things like marketing and branding and stuff like that. And I got a call. I thought it was a scam. And they're like, hey, I like your background, this and that. And that's how I got into it.
Oh, okay. That's what's up. What would you say is if somebody is wanting to get into that field and wanting to start repairing credit, what do you think is the best first step to do? Do you feel I believe you need to get licensed for that, no? Or how does that work?
You can, but you don't have to.
Okay.
You can, but you don't have to. It just depends on how large of a business you want to run.
Yeah.
And it's actually one of those things where it should be more licensing for people who specifically want to build a career in it. What I would say is credit law, study credit law a lot. I got a lot of information through training through my corporate 9-to-5 job on the debt validation end. But they have this motto of just becoming an expert. The more you know about something, the better you can talk about it and convey it. And that pushed me to learn more outside of work, and that got me into doing it for myself.
Oh, okay.
Yeah.
In your experience, man, what would you say is the wildest credit repair story that you had to see and go through?
Oh man, so I didn't even know credit could get this low, but I have seen 325, 350 credit scores. Yes.
Damn, that's pretty low right there, man. I haven't heard that one yet.
Yeah, I've seen it's kind of rare, but you see credit scores in the 400. I used to think that was the lowest credit, but I have seen credit scores in the 300s. Really, it's about consistency. So when you really learn credit, you understand that it's a science. It's kind of like an algebraic equation. You need to take these steps and that steps to get these results, and the rest of it is just consistency. So in that sense, I coached that client month in and month out, and it was an accountability thing. Pay down your debt. This is what we're doing to help the accounts, but it's not so much just as far as disputing, but it's also what you do outside of the disputing that matters.
Okay, I see. So what was the process on that client that was in those 300? What was the first step, and what were you basically telling what we could say training them to do and the way to spend?
Got you. Okay, so when it comes to the first steps, if you're in debt and your credit score is really low, let the accounts close. A lot of what people do is, and it's what credit card companies don't want you to know, they'll call you, they'll say, hey, we can make an arrangement with you, right? Yeah. You make an arrangement, you're paying portions of the bill, but what happens is they're not reporting the account current. Yeah. So when you're making partial payments every month, they're still reporting at 90 days past due, 90 days past due, 90 days past due.
They're still reporting that, yeah.
So it's dinging your credit every single month. Yeah. So in that sense, I had to advise the clients to let the accounts close. On a normal sense, that takes anywhere between, it takes about 120 to 180 days, just depending on the creditor. While the accounts are closing, I'm advising clients, save your money. You don't have these credit card payments every month now.
Yeah.
Put those funds in savings because you're going to need those funds to build your credit up. It's essentially an investment.
Yeah. I see. I see. What would you say is like the biggest myth that many people believe in credit?
Man,
repair?
that's an easy one. If you pay all your credit cards and all your loans on time, you will have perfect credit.
Okay.
If that was the case, we will all have 800 credit scores, but I'll explain why it's the biggest myth. There are certain things when it comes to credit, like that basically count percentage wise, right? So your payment history counts for a certain amount of percentage. You know, your debt to income ratio, your DTI, your available credit percentage, which is essentially how much credit you're given amongst all your credit cards, basically, versus how much of that you use. Your DTI and your available credit percentage, those are partnered. Those account for about 65% of your active credit score.
Okay.
So if you're maxed out on credit cards, your credit score is always going to plummet, especially if that available credit percentage is under 50%.
Yeah.
Most people think, well, I'm paying everything on time every month, so my credit's good.
I see.
Yeah.
I do hear that is something that a lot of people believe, and then they think in their head they're like, I'm doing it perfect, like this is what I need to do, but in reality it's like, oh, it helps a little bit, but not. Yeah. It's not going to repair everything, right?
So realistically speaking, payment history accounts for about 15 to maybe 30%, and that just depends on how much age you have. If we're speaking credit card specifically on that credit card, if that credit card's been open for 15, 20 years, you're probably looking at closer to 30%, right?
Okay.
But if it's a new credit card, you're looking at like 15, maybe 19%. And the problem is there's so much limited information given on credit.
Yeah.
So most of us, when we get credit or before we turn 18, our parents give us a talk, go get a credit card, buy yourself something nice. Don't pay it off because you have to make the payments on the credit card to build your payment history, but they don't know that's only a piece of the pie, and that's what credit card companies want.
I see. Have you ever looked at someone's credit report and kind of thought like, this is gonna take a miracle? Like you kind of had like doubts, like, oh my god, like this is like so bad. I don't think I can help this client.
So, not necessarily because I'm looking at the credit report.
Yeah.
It's more so mindset.
I see.
I've coached clients who, you know, we can go through all the right things, but if they are not vested, in like I've seen clients, and I think the worst clients are like clients who've gone through like debt settlement companies or credit consulting companies.
Yeah.
Because they make the process easy, what happens is they get out of that program in a year, 6 months to a year, and then they do the exact same thing. And so when you come to a space where it's like, hey, I'm going to work with you on your credit, but it's also going to require something out of you. I'm working on their credit, but they're still opening new credit.
Yeah. Oh, yeah.
So
it's crazy.
Yeah. So
you want help or not?
Yeah. And so it becomes more of a thing of like, you're actually working against yourself. Generally, when I have people that are fully engaged, they're fully committed to the process goes how it's supposed to go, no matter how low their credit score is.
Yeah, I see. Yeah, there's like, they definitely have to, they want help, but they also need to help themselves, right?
Exactly.
They need to like go with the guide on the correct way to go ahead and fix this. But some people are hard-headed. Some people are like, it's okay. And man, they be running their credit. I mean, like I was saying before, I work in furniture sales. There, though, whenever people run their credit, it's actually a hard pull most of the time. Whenever you're buying, you're interested in buying something that is over $1,000. You know what I mean? Because you can get approved for a big amount. And like, man, like I can't even count all the customers that come in that know they don't have good credit, but they keep wanting to run it as if it's gonna be a miracle, right?
So that is very true. That is very true. And one thing that I coach my clients on is before you apply, ask, is it going to be a hard pull or is it going to be a soft pull? Just like you said, most things over $1,000, especially if you're borrowing, especially if there is collateral attached to it, furniture, cars, what have you, is going to be a hard pull. What most people don't know is that hard pulls or inquiries that don't result in an approval can be removed.
Yeah. Oh, okay. Okay.
Yeah. So if you don't get an approval, you can get them removed. And
Oh, okay. Okay.
essentially, um, and I'll explain a little bit about that. That is because, let's just say you go buy a car, right?
Yeah.
You going to buy a car. They say, hey, if you don't come with the pre-approval, then they say, hey, we're gonna run your credit, right?
Yeah.
You give them authorization to run your credit one time. But what happens is they run your credit through a system full of banks that they work with. So they'll run it the one time. If certain banks are interested, they'll say, okay, hey, we want to get a closer look. And then each one of those banks is running your credit.
Yeah.
Well, you gave authorization to the dealership,
Yeah.
but you didn't give authorization to each one of those banks to run your credit so you can get them disputed.
I see. I see. That makes sense. Yo, yes, that is true. They call it, I think, like a waterfall, where they just kind of just run it through all their whole system. Whatever they get approved, they come back with it. Because at the end of the day, those salesmen, they're there to make a sale. They
Exactly.
don't care about running your credit or even damaging your credit. Even if you're saying don't run it through all of them, just one. For them, they're like, I'm here to make a deal, and like that's where like that comes where a lot of people end up messing up the credit even a little bit more. You know what I mean? If they're not knowledgeable.
Yes.
Yeah.
So can we talk about the furniture thing now?
Yeah.
That's the thing. So I've had a lot of clients where they have furniture accounts with like Ashley Furniture or whatever. And it's not a bad thing. People just aren't informed.
Yeah.
So I always tell people, hey, anytime you are doing 90, 120 days, 180 days, or 24 months, I'm going to get this furniture. I can pay it off with no interest, right? Well, revolving credit, most of the time we think about credit cards, but all that means is that your interest rate is subject to change.
Yeah.
So when you're financing furniture, a TV, whatever it is, if you're getting a deal, your interest rate is subject to change. So I always tell people, if you're going to do it, there are times where we need to use credit. We can use credit to our advantage. You want to have savings, right? You don't want to deplete your savings. Put a down payment, because what happens when it goes in your credit, it is an installment loan, but is a revolving installment. So when it shows up, if it's going to show up, it shows up like you've maxed out a credit card. So when you get a credit card, if they approve you for $10,000 and you use $2,500 on furniture, they're going to say, hey, you have this much remaining.
Yeah.
If you get approved at a furniture store for $10,000, but you only spent $5,000, they're only going to report that $5,000 on your credit report. So if you don't pay that balance down, it's going to look like it's maxed out.
Yeah. I know what you mean. Some of them will, a lot of clients will get approved for 5,000 and then they use the whole 5,000 with no down payment at all. And yes, I know what you mean. That you're maxing out the credit, and that could be a negative into the report as well. Gotcha. How did you first get into fixing people's credit? Is there like a personal story behind it?
So, I think for me, just seeing that there was an aloofness around credit, like especially in the minority community, I grew up and my parents really instilled a lot into me and my siblings because no one really taught them about credit. No one really knew. And so, they were like, hey, do these things. They did what, essentially they knew, like they taught us what not to do, essentially. That got me into loans and finance. And when I got into loans and finance, I was like, hey, this is not really helping. People need to be more educated. And then I got into the credit world. Once I started to realize, hey, this is something that I'm good at, this is something that I enjoy learning about, I inadvertently became the credit expert for everyone around me. Yeah.
You broke that chain. You was like, I got to be the one to, be more knowledgeable on that. And I see.
Yeah. They pushed it though. They pushed it. They were like, hey, like this is your thing. Like this is your calling. This is your thing. And that really pushed me to do it outside of I'm just doing it to make money.
Yeah. But yeah, no, like you were saying, also in the Hispanic community, I feel like they don't know much about credit either, especially I would say like the first generation as well that, come here from Mexico or like other places as well. They're not as knowledgeable and they tend to like just want to pay everything cash. Um, but I mean, you know, like I was saying, like me, I'm first generation. My parents, they didn't know much about credit, so I had to just kind of like give them knowledge on it. They don't need to, buy the whole car cash, or they don't need to buy a house cash or a property, some land. You can take, advantage of low interest rates and monthly payments for a fixed amount. You know what I mean? And yeah, I think that's very important to. I think now in like technology and like the social media world, many of them are starting to get into that now because they see people talking about it. But I feel like back then it was like it would just go over their head and they wouldn't even worry about it. You know what I mean?
True.
Yeah.
True. And not everyone that I was around, but like I know a lot of people that were like, hey, like you can't really squeeze blood out of a turnip, so like, hey, if my credit messes up, like I'm not gonna think about it until I need it, which is a big problem. But what I'll say is it's a fine balance. When I'm coaching people specifically, because there are times where like I have had clients and they mess their finances and their credit up so bad that they are terrified of credit.
Yeah.
Yeah, like they're like, I don't want anything to do with credit after this. And what I tell them is, well, what happens, 5 years from now when you want to buy a home, or, you want to put your kid through school, you need creative financing to do that, or you want to buy a new vehicle. We do need credit. The key is the balance. Cash is king, but allow credit to be a funnel.
Yeah.
So I teach people to use their credit cards like a debit card.
Mm-hmm.
Don't put anything on that credit card. If you're gonna go buy the typical example I give, if you're gonna go buy a TV for $500, you've got $1,000 credit card. If you put that $500 TV on there, immediately your available credit percentage is only at 50%. After 50%, the credit bureaus look at it like you're using your credit as an extension of your income, not a tool.
Yeah.
So I say, hey, you have savings in the bank, right? You have savings in the bank. Okay. So when you go get that TV, I want you to pay $250 in cash, but $250 on that card, right? And then you have savings, take $125 out of your next 2 paychecks.
Yeah.
And pay it off.
I see. Well, what if they're looking at a $500 TV and they pay with it for their credit card, and right whenever it goes on the balance, they pay it off like the next day?
So you can do that too. And I like that you asked me that question because a lot of people feel like if I pay something off immediately, it's not building my credit. It is building your credit. They can see the activity. And actually, now, I normally tell people try to do it in 2 payments.
Yeah.
And if you pay it off immediately, that's fine. But let's just say you have to pay something out. When you make more than 1 payment in the month, so especially revolving credit, the interest is set to compile every 30 days.
Yeah.
When you make, 2 payments within a month, or you make 3 payments within a month, what happens is you're tricking the system. So you're boosting your score, but you're tricking the system because there's not a full 30 days of interest that gets to compile in between those payments.
I see.
Yeah.
Whenever I got out of high school, whenever I applied for my first credit card and all the credit cards I have, that is the way I build my credit. I never left the balance.
Yeah.
Never. Like each month it was paid off. So, like, you're right. I mean, if my credit score looks like how it is right now, then they are looking at the credit. You know what I mean? But I've always done that. I mean, I know, sometimes it's okay to, pay it off monthly and stuff, but I just never did. And the credit is looking good now. But you know what? That's crazy you say that, because there are some people that believe that it's not helping them at all if they just pay it off the whole month. And I always wonder why that was.
It's because propaganda.
Oh, okay.
Propaganda. So, unfortunately, financial literacy is not taught in school. Like, we can say that, we went to pretty decent schools.
Yeah.
But it's not taught in school. And that is for a reason. When you get on apps like Credit Karma and things like that, you see that they have the advertisement for credit cards. This is going to help your credit. They're not just advertising that because they think it's going to help your credit. They're advertising that because they're being paid by the credit card companies. And so a lot of the information that we get is information that's given to us from creditors
Yeah.
because they want us to do they want us to do things a certain way. Banks, credit card companies, lenders, they make majority, like 75% of their income off
Yeah.
of late fees and interest.
Yeah, I was actually gonna ask you how do these credit card companies make money? And it is from interest and fees.
Yes.
Man, I bet they make a lot of money though. I bet
Absolutely.
they make a lot of money.
Absolutely. They don't want you to have the information. And it's funny I say this because there becomes this in between space where it's easier to get credit when you have bad credit. Yeah. Anytime I have clients, their accounts closed, we're working on the rebuilding process or the coaching process, they'll always tell me, Jay, I'm getting credit card offers like out of the wazoo. Like, and it's funny because some of them will be the same companies they just charge off on. Capital One's really good at that. You know, and I say it's because when you have accounts closed and when you have accounts charged off, they know that you're more probable to pay because you're trying to build your credit. But on average, those credit cards have, on the low end, probably about a 25% interest rate.
Yeah, I've seen some go to like 32. I think some even 35. I'm
Absolutely.
like, damn.
Absolutely. There are safeguards, though.
Yeah.
Yeah, there's safeguards. And I teach people about the safeguards. There are things, and like you might have seen it where they advertise like kickoff, right?
Mm-hmm.
And they'll tell you, hey, for $5 a month, you can start building your credit. But I wouldn't suggest that. I would suggest $25 or $35 a month. What they'll do is they'll report a revolving trade line on your credit profile. It's something that like I keep even myself. And so what happens is like if you don't have excessive limits, like $10,000 limits, if your credit usage goes up a little bit, it's set to fluctuate with your normal credit usage to keep your credit score stabilized.
I see. Why do you think the school system doesn't want to teach their students about credit?
Man, I think it's a lot of things that they should teach in school.
Yeah, that's a lot. There's like so much. Like we gotta learn stuff on our own after school. You know what I mean?
Oh man, like there's a lot of things that they should teach in school. Yeah. I think that there's just this push of what people should know.
Yeah.
You know, and I think it's kind of hard to define on, you know, I guess from an educational standpoint, what's important and what's not.
Yeah.
Like, I was fortunate. I graduated in 3 years. So like I went to a big high school and then I transferred to a small high school, and the classes were smaller. The teachers were more attentive. I learned a lot of things that prepared me for the real world and prepared me for college. And I think that in some places the teachers just don't have the time. Yeah. You know, and there's a lot of with the state testing and stuff like that. So I hear from like teacher friends, you know, has to do with how much funding the school gets and things like that. So I feel like they focus on that more.
Yeah. Yeah. And I think everyone has been saying this for years and years, and there has been no changes in the school system. I think now they added entrepreneurship classes now, but like they don't have specific classes for like credit or like knowing how to purchase a vehicle or a house or some land. How much percent do you need to put down if you make this investment? Can you have two primary residents? They give you none of that information. And I just not even, and most importantly, all that stuff has to do with credit. Credit is like the most important thing out of all those, and they don't want to teach you that in school. That's insane to me. You know?
Man, I really feel like there is like just a hidden agenda with like school funding, but you know, also like bringing up entrepreneurship. Yeah. I think that's why it's so important, like especially for our generation to be entrepreneurs and to not just become entrepreneurs so we can look fancy on Instagram and social media, but you know, money buys you a seat at the table.
Yeah.
Money buys you a seat at the table. You know, in these spaces where there are board of directors and, you know, charities and things like that that are putting into these schools, you know, there should be more people that make that a priority. And I think that if parents, like we're the next generation of parents, right?
Yeah.
So if we say, hey, this is something that I really see fit to be in the school, right? And it's something that we fight on, I think that it's something that could happen.
Yeah. Oh yeah. Hopefully, there's a change. I mean, good thing that they do have that class now, but hopefully it starts escalating as far as making a big change. Because honestly, I'm not sure if you agree. There were so many mathematics classes that we were taking and we're not using it at all.
Oh man.
I mean, like they'll ask you a question and like to answer the question, you'll have like writings of like this long to answer that. You're like, when am I going to use this?
Yes.
And let's say you want to be an accountant and you need to know all this information. To be completely honest, there's already softwares and systems that do all that for you. It calculates everything you just with one touch of a button. I feel like, yes, back in the day when it was old school, you would probably have to write everything down, but softwares now. But they know it already, you know what I mean? It's like
Exactly. Man, it's one of those things too. Like I had a big realization, I think, like going into the real world of like, man, how much of this was useful. I jokingly say all the time, I can't do math unless there's dollar signs in front of it.
Oh yeah. Nah, for real though, yeah. That makes sense though. Yeah. That's kind of like my standpoint too.
Right.
What school did you end up going to? You said that you transferred from high school?
Yeah, so I went to South Falls, and then I enjoyed learning. I didn't like being forced to be in a confined space like for a certain period of time. So I ended up going to Winfern, and it was really funny because my parents were like, "Why do you want to go to this school?" And I was just like, "Hey, like I'm ready to get into the real world." So I did that. I did 2 years and 1 year after my sophomore year, and I finished up in summer school, and I was into the world.
I did. I actually know about Winford. I have like 2 friends that went there. It is like a faster pace, and like you can finish out. Is that also a school where like if someone couldn't complete high school and they go back, they can go there?
Yes.
Okay.
Yeah.
Okay.
So, but man, like I had some really good teachers there. Like there were things that I did there that I probably wouldn't have done if I would have stayed at Falls.
Yeah.
Like, we did like 10-page essays, which like being 17, 18, it was like, man, I don't want to do a 10-page essay. But when I got in college, like, and I already knew how to research and do essays and stuff like that, I was like, man, this was so useful.
Yeah. Like it's so crazy because whenever I was in high school, like I used to hate doing that stuff, but like now I'm about to graduate and like, man, I love doing essays.
Man, what?
I never even thought I would say that. You know what I'm saying? I'm like,
man,
like you just getting all this knowledge and you just get excited because you're learning something new, or because every day you learning something. You know what I mean?
Yes.
But yeah, it's kind of crazy how that works.
It's one of those things too. You like when it comes to higher education, I think that you have to not seek higher education for money. I think that you have to seek higher education for passion, because if it's something that you love, you know, you are doing work, right? But you're almost like engulfed in your work because it's something that you love learning about. Like, you know, the personal finance part of my degree and the leadership part of my degree, like I can do that stuff all day long. Like my friends are like, I hate writing papers. How you write these papers? I'm like 2 weeks ahead.
Yeah, no, I feel you on that one. In the credit world, what actually happens behind the scenes when like a collection gets removed? Can you like break that down?
Yeah. So a lot of what people don't know is when it comes to credit is one of the biggest, or like the credit bureaus are one of the biggest facilitators of AI. They're probably one of the first to really effectively use AI.
Oh, damn.
There are millions and billions of people, right? And so, you know, a lot of times it's like easy to think, okay, like if I'm sending this dispute letter off, somebody's going to read it. They're going to look into it. It's going to get removed from my credit. It is not that deep. There is primary credit bureaus, Experian, Equifax, TransUnion, but there's also secondary credit bureaus, LexisNexis, and there's a lot. But essentially what they do is, you know, when you apply for loans or when you move to a new residence, They're basically a informational database. So they store everyone's information, and what happens is when you dispute with the original credit bureaus, right? They don't necessarily need to verify that this dispute is valid. The only thing they need to do is tie you to the debt.
Okay.
So if they can verify that a portion of this debt has something to do with you, it's going to be more difficult to dispute. So when I go in and I dispute for my clients, I am making sure that all of their personal information behind the scenes is frozen.
I see.
And what happens is just like a typical debt validation model, right? They've got to, under the FDCPA, they've got to be able to provide all documentation and file about your debt before they can collect on it under federal law. Most people don't know that. And so when you go through the validation process, if they can't tie you to that debt, they have to remove the debt.
Okay.
Yeah.
It's mandatory then.
Yeah. So, and you know, every process, like I always say, every account is different. There are some, you know, some agencies and things like that that put up more of a fight. There are tactics that they have to kind of prolong the process per se. And so what I would say to somebody who is disputing on their own is don't get discouraged. Because it is, and especially if you are just getting familiar with the arena or the information, it's easy to like get this letter and say, hey, they said the debt is valid. I guess there's nothing that I can do. I'm going to pay the debt, you know, but there is more that you can do.
Yeah, I see. If someone's credit is in bad shape, what's the first move that they should make before calling you?
Got you. So so two things. I think you have to decide, my credit's in bad shape. Is it because of credit cards? Is it because of late payments?
Yeah.
If you have to decide, can I afford to keep these credit cards, right? Or do I want these credit cards to close? I think that's the biggest decision to make. If I can afford to keep these credit cards, I need to come up with an aggressive plan to pay these credit cards, get these cards current, and to pay them off. Or when I tell people more realistically, get the balances 50% or lower.
Okay.
Yeah, that's the start. And then at that point, you know, if it's someone who's saying, hey, okay, I want to keep my credit, but I just need to know how to get past, I'm stuck in the 550 range or I'm stuck in the 600 range. You know, those are my clients that I coach.
Yeah, I see.
Hey, I don't necessarily need to dispute for you, but let me coach you. I'll tell you what to do. Sometimes it's the lack of credit. Your credit is like a muscle. If you don't use it, you lose it.
Yeah.
You know, and if you work it out too much, it's gonna be a strain. So it's finding the balance. If you're wanting to work with me per se, let the accounts charge off.
Okay.
Let them charge off. Ideally, let them go to collections. You know, but I can deal with charge-offs and collections, but ideally let them go to collections. That's a little bit of an easier process than an active charge-off that has not transferred.
Gotcha. Okay. That makes sense. What would you say is like one common habit that you think quietly destroys people's credit over time that people probably don't even think is going on?
One common habit that quietly, it's debt.
Just debt, yeah.
Debt, and something that I talk to people a lot is co-signing.
Yeah.
Co-signing actually can be a silent killer because even if the accounts are in good standing, and I talk to people about this when it comes to estate planning, and also like there are a lot of parents that like co-sign for their children.
Yeah.
And I tell them, I say, hey, well, you know, Miss Susan, when you want to go get yourself a car, when you want to sell your home and buy a new home, what happens when you've co-signed for your children? And, you know, she'll say, well, Jay, you know, I'm not paying this. My child is paying this. It's current. Well, that's okay. But your debt to income ratio looks horrible, right? Anytime we apply for anything, when we file our taxes, they know how much money we make.
But you're right. A lot of people co-sign and they feel like because the person that they co-sign for is making automatic payments that has nothing to do with them. Mm-hmm. But you have your whole Social Security and credit involved with this too.
Yes,
you know what I mean. Damn, I never thought about that, but yeah, I can definitely see that happening. They when applying for something, they really take that debt to income like very
Very
serious.
seriously. Very well, and you have to look at it from a creditor standpoint, right? You know, they're in the business of lending money, but they're secondly after that, they want to mitigate risk.
Yeah, exactly.
So, you know, if they're looking at your financial situation, things happen every day in real life. A company goes out of business, we get laid off, a partner gets sick, we have half the household income that we used to have.
Yeah.
Right. So when they're seeing you at the top of your budget and they're like, hey, if there's one more straw in this camel's back, you know, we're going to be the first thing to go when someone has to pay their mortgage, their car to get back and forth to work.
Yeah.
Are they really going to pay the credit cards?
I see. I see. Can you simplify how credit scores are calculated? What really moves that needle as far as the numbers going up and down?
Man, I think you can probably ask any credit person that, and they will say there is a vagueness about it.
Yeah.
And what's interesting is that depending on the scale, and here's why I say that, because the best thing to do would be go to my FICO. My FICO is going to give you a breakdown. Normally, you've got your DTI, your available credit percentage. I tell people if you don't have revolving credit, you're missing out on being able to grow your credit.
Okay. Okay.
Right. So that's one thing, but also if you misuse it,
Yeah.
you can plummet it. That accounts for about 65%. Then you have your payment history. That's 15 to 20 to 30%, just depending on the age of the card. But what people don't know, the biggest thing people don't know is grade of credit.
Grade of credit.
Grade of credit. So you have a credit score, and then you have a credit grade, A, B, C, D, E. Or yeah, it's like A, B, C, D. Yeah, I rarely see E's, but I think it skips E and it goes like to F.
Okay.
That depicts your lendability. There are people that have 700 credit scores that will still get denials.
Yeah, I've seen that before.
Yeah.
Yeah.
And that happens because, you know, they have, let's just say somebody put them as an authorized user on a card that's been open for 25 years.
Yeah.
That's automatically going to shoot their score up, and maybe they have an auto, right? But what happens is their credit has no variety. The bureaus and lenders want to see that you can manage different types of credit. So, like, I would really stress that when it comes to moving the needle, making sure that you're using revolving correctly, but then also making sure that you have a variety. I tell people you don't want to have more than 5 credit cards at a time, right? But you want to have a higher limit card for emergencies or travel, right? You want to have an everyday card that you use for maybe gas, groceries that you can pay off week to week, month to month. And then you want to have some type of, typically some type of trade line. So like Kickoff is one that I suggest that's going to safeguard your credit, but it is going to show up as revolving. You want to make sure that you have some type of installment on your credit. Secured and unsecured is typically good. Most people think, oh, I shouldn't use secured if I have good credit. When you're building your credit, that is key. Secured cards, saving secured loans can build your credit score anywhere between 40 and 80 points within 90 to 120 days if you use them correctly. So, and always keep a merchant account. So if you shop at Walmart a lot or if you shop at Target a lot, have a merchant account. They're going to see that and they're going to say, hey, this is someone that can manage different types of credit effectively. We're going to deem them as lendable, and it's going to boost that score.
Gotcha. Man, a lot of good information, man. That's a lot. You know a lot, man.
Man, that's like my first world.
Yeah. This is an interesting one right here. So, without saying any names, what's the wildest situation that you've seen where someone's credit was like a complete disaster?
Oh man, it's funny you asked me that question because I often tell like crazy stories to my family, and they're like, "You should make content just about this."
Man, I can see that. You probably go on and on, you know.
Man, a lot of it comes out of entitlement, but I had this one client who filed bankruptcy before I took them on, and they went through about 3 or 4 programs before they got to me. And essentially what was happening was, okay, I know it's easy to go through these programs, so I'm going to charge off on this debt. I'm going to run this debt up. I'm going to keep charging it off. And but then there was a point to where a lot of people don't know this, but you can get sued on debt.
Oh, really? I didn't know that.
You can get sued on debt.
Damn.
And so
they're not playing.
yes. Well, so let me say this. Any state that is a community property state, they will not sue you. It's rare that they will sue you because they cannot garnish wages in community property states. So to our friends that live in Texas, you are safe unless you move.
Okay, I see.
Yeah, unless you move, you're safe. But what happened is I had her as a client, and man, just gave me a hard time. Every month I would be like, how's savings? Oh, well, I'm not really saving, but I took a vacation. Like,
no fucks given.
at all. At all. At all. And I mean, made a really solid income.
Yeah.
Really solid income. But credit score was trash. Every month, just about every couple of months, we're taking vacations, we're going shopping. I'm seeing the available credit percentage. I'm seeing it going up. And that's another thing. I've learned to just understand when people are lying and people are bullshitting me.
Yeah.
Because it's like, okay, how's your financial situation? Are you saving? Yeah, I'm saving. Okay. Credit card went up $3,000. What's up with that? Oh, yeah. I can see that. But yeah, so this person basically just was like, hey, I don't want to do this program anymore. Like, created a whole big deal about it because they were getting sued. And then like in a corporate space, there's attorneys that help clients with suits. But then, they would help with suits for an arrangement, but then the person would not pay the arrangements for the suits. And then it was like, well, hey, like, then they got garnished.
Dang.
So then I'm the bad guy because they got garnished.
They start putting it on you. They don't got nobody else to put it out on.
Yeah.
Like,
Yeah, and that's normally what happens though. And I hate to say this like in a stereotypical way, but like bad credit is always rooted in something. It's rooted in a spending habit.
Yeah.
It's rooted in a need. It's rooted in a need to keep up with society. It's always rooted in something. Sometimes it's rooted in family issues. Like it's rooted in I've had someone tell me, I always mess up my money because I never lived a life where I knew what it felt like to be financially stable. And it actually scares me to be financially stable because I don't know what it looks like for me to not have to deal with that.
So some people, when they start getting money, they feel like they need to spend more money. But some people see it the complete opposite. Once you make more money, you save more money.
Yes.
And I'm like, damn, like, because a lot of people that make good income, like, they actually work paycheck after paycheck because they end up going with the expensive house, expensive vehicle. But, like, a lot of times they make more money, but they're more stressed out than the person that's making less because they're not in debt like that.
They don't know how to scale. Man, I had a client that was around the same age as me. I'm coaching him. Makes over $25,000 a month.
That's crazy. That's bread. Yeah.
But the problem is that when you get to a place where you make that much money and you start to take on so many responsibilities, what is a budget?
Yeah.
And a lot of people don't realize. A lot of people feel like budgeting is for, okay, I need to budget out. I'm buying this much food. I'm spending this on this. A lot of people feel like, a budget is for people that don't have money.
Yeah.
But people that have money need budget the most. How do you know that your accountant is advising you correctly if you don't take a look at the paperwork? How do you know that you're paying the right amount for everything that you're paying? And the more money you make, the harder it is to be disciplined, essentially. Yeah. And I thought that was crazy to me. Like over $25,000 a month, but no savings.
Dang, that's insane.
No,
Man,
no savings.
that's insane. But yeah, no, that makes sense. A lot of them, they don't know how to scale. They get overboard. They go overboard, and then, like I was saying, they do get into a worse situation than the person that makes even less.
Yeah.
But that's crazy. But and everybody's, they think that the people that are making money, they're not even worried about that. But most of them are actually worried about that too. Have you ever fixed someone's credit so fast that they were like surprised?
Oh yeah. Oh yeah. Recently, now I will say this disclaimer: sometimes student loans are hit and miss, but with how I do my dispute process, it's a lot faster than most, and people have gotten deletions in like 2 weeks. 2 weeks. So I got like recently like 50, 60K in debt removed from someone.
Oh,
in like,
shit.
In like 3 weeks.
That's crazy.
Yeah.
So how do you do that? How do you get the debt removed? What is the process? You just reach out and just kind of send them an email and stuff, or
It really depends on what the debt is.
Okay.
It depends on what the debt is. But I can't tell like my whole dispute process.
Yeah, I understand.
Because some of it's trademarked.
Oh, okay, okay.
But what I will say is it has to do with like dates and also when you do it for so long and you see certain creditors for so long, you know who's gonna put up a fight and you know how you need to approach it.
I see.
Yeah.
You're like, oh no, I know these people. Like, I gotta do it this way. I can't do it like I did the other company. Yeah.
But what I will say to that, so the removal part took like 2 weeks, but there's this silent process, and I tell every client there's gonna be a process where it feels like nothing's happening for maybe like 30 or 60 days.
Mm-hmm.
And the reason being is because I essentially turn my clients into a ghost.
I see.
So everything's locked up. No one has access to the information. I tell them don't apply for anything, don't do anything. And so it's kind of like, okay, is it going to happen yet? Is it going to happen yet?
Yeah,
is it going to happen yet? And then I'm like, hey, okay, we're sending this letter. This is where we're sending it to. And then like 2 weeks later, and sometimes I still get surprised.
Yeah, you're like damn.
Yeah.
I did that.
Sometimes I still get surprised and they're like, oh my gosh, this came off in a week or it came off in 2 weeks. But it's essentially that happens because of the prep work, how I handle the secondary bureaus.
Yeah.
And I do a combination of electronic disputing and written dispute.
Okay.
Yeah.
Gotcha. Do both then.
Yeah.
Did you ever have you ever got like a call from a client that was just like shocked and like very happy that you fixed the credit, like just excitement coming out of someone?
Man, I call them with the excitement.
Oh, okay.
I call them because it's something that I truly enjoy doing, and because I have learned how poor credit can change your quality of life.
Yeah.
I do calls. So when I do my checks, every 2 weeks, sometimes every week, just depending on what I'm looking for.
Yeah.
And I normally will send a text out or I'll call, hey, your credit score just went up 140 points. That just happened recently, and I will call people. It makes me happy to be of service, and so like most of the time I'm getting excited with them before they even notice it.
Yeah. I see. No, that's good. I feel like once you're excited for your clients, I feel like that's truly like your passion. You know what I mean?
Yeah.
If you're not excited, then you're not gonna be excited doing the work. You know what I'm saying?
Exactly.
What would you say is one simple trick that can give a credit score a quick boost?
Give a credit score a quick boost. Trade lines are really good. Also, you can go to trade line boards.
Trade line boards, okay.
Yeah, you can go to trade line boards. And so essentially what that is piggybacking off of somebody's credit. So like if you know somebody that has really good credit, being an authorized user, putting yourself as an authorized user on their card, it's not like co-signing. So you're not legally obligated to pay the debt, but it reports to your credit profile.
Yeah.
So like if you've got grandpa, grandma, mom, dad that have really, really established credit and your credit score is just maybe like subpar and you want to get a quick boost, that's really a big way to, boost your credit score, 20 plus points, especially if that car has like 15, 20 years age
Yeah.
on it. Yeah.
I see. I didn't actually that's actually something I learned new. I didn't know that. I think like I thought once you make a application for like a card, if you don't put an authorized user there when you first make that application, then you can't make any changes in ad. But you can call an ad or not all of them or some.
Some.
Okay.
Some. I actually found that out recently. All credit card companies don't do it, but a lot of them do it.
Okay.
Yeah.
I see. Why do you think people think that paying off collections automatically improves the credit when sometimes it doesn't?
Because of the denial process. So I'll explain this because I used to be on the other side of the business. I used to be a lender. So when we are denied credit by law for truth in lending and to make sure it's not discriminatory, like someone's just saying, hey, I don't like you, so I'm gonna deny you.
Yeah.
Right. They have to give you a reason for denial within about 12 days. So what happens is a lot of times the reason they give us for denial is not actually the reason they're denying us.
Yeah.
So as example, the problem could be I don't have established credit, right? But let's just say I have a negative, or I had, a couple of missed payments on my auto loan. Outside of that, I don't really have any credit. Where they're going to deny you because they have to give you a denial. They're going to say, well, hey, the next best negative is the 4 missed payments you had on your auto loan, right?
Yeah.
But the real problem is that you have not reestablished your credit. So because of how that denial process works, a lot of times people will say, well, I'm getting denied because I have collections. I can say for a fact, I have clients that have had charge-offs, repossessions. They have collections accounts, and they still have a 700 credit score, and they've been lendable, and they've been able to attain new credit. That is because of the reestablishing of credit.
Yeah.
So most people have that presumption, if I pay this collection off, then my credit score is automatically going to go up.
Yeah.
Not necessarily. The most damage happens within that 90 to 120 days that account is charging off. That's really the most that is going to affect your score. So like, even when I am disputing with people, let's just say they have no credit, they have all these collections, I tell them, before I dispute these collections, I want you to get credit, because what's going to happen is I'm going to dispute these collections. You have credit, your available credit percentage is going to go up. Now you have available credit percentage. Now you have something revolving. So when we have the combination of the two, then you'll see your credit score shoot up 50, 60, 70 points.
So a lot of stuff that goes around with it then, I can see that. Doesn't sound as simple as it sounds.
Yes.
Man, that's crazy. Talking about repo, man, you hear a couple stories of people getting their stuff repoed? Yeah, we actually repo, well, if you do like, if you do like the lease to own kind of things, man, if you don't pay those off, they come and pick that stuff up.
The best thing I tell people in that situation is to voluntarily surrender.
I see.
It looks better, if you voluntarily surrender the vehicle or whatever it is, they have to report that it's been voluntarily surrendered.
I see.
If you make them go through the process of doing all the paperwork to do a full repossession, they're going to put it on there as a repossession. It's a difference between a repossession and a voluntary surrender versus, or it's a voluntary surrender versus a charge off.
Yeah. You seen it in videos where they'd be like hopping in the car when they try to I'd be like, damn.
Yes. Yeah. But I tell people that, like, if you are not going to be able to afford the vehicle, don't make them look for you. Go drop the vehicle off, give them the keys, sign the paperwork, keep the paperwork for your documentation, because if they report it as a repossession, you can have them change it to a charge off or voluntary surrender.
Okay.
It's not going to look as bad. When they sell the vehicle, they're only going to report, the difference of the balance. If there's a balance owed, it's going to be a lot better for you.
Let's go ahead and do some rapid fire questions.
Okay.
Let's see. Number 1, cash or credit card?
Credit card.
Credit Karma or Experian?
Experian.
Okay. Buy now, pay later. Is that smart or stupid, or it depends?
Buy now, pay later. It depends.
Student loans. Is that more of a blessing or a curse?
Um, I would say it's a blessing. I would say it's a blessing. Yeah.
True or false? Paying off a collection always boosts your score.
False.
What's worse, maxing out a credit card or missing 5 payments?
Maxing out a credit card.
Gotcha. If you were to name the top 5 credit cards, which one? How would you number them from 1 to 5? If you need some time to think about it, go ahead.
So I probably couldn't give 5, but Discover's in the top of my list. Discover's on the top of my list, especially if you never had credit before. Capital One is good. I would say neither one of those. If you're gonna get them, don't charge off on them.
Okay.
Then you've got Navy Federal, Digital Federal Credit Union.
Yeah.
Definitely advise. And then PenFed.
PenFed, I haven't heard that one.
Yeah. Yeah, so I would actually kind of put them under Navy Federal a little bit.
Okay.
They're not as known as Navy Federal, but just as good. Same benefits. So and they're kind of underrated.
What would you say about the credit cards that have no annual fee and the credit cards that do have annual fee? Which one would you choose and why? Or which one do you think that is best to choose, I guess, for someone's lifestyle?
So you should be picking credit cards based off your lifestyle. So, if you have an annual fee, but you get perks or rewards, you get, discounts on your flights because you travel a lot,
Yeah.
the annual fee is worth it. If you're someone that uses credit very minimally, you're going to want to go with the no annual fee, even if the interest rate's a little bit higher because you're not using the card as much.
The 2 cards that I see a lot is going to be the Chase Sapphire and the Chase Freedom.
Chase is good too. Chase is good too. I wouldn't knock Chase. Now I tell people this all the time. The lowest on my list, like low totem pole, Wells Fargo.
Dang, okay.
Wells Fargo, yeah. There's they had like a class action lawsuit against them recently. Like they were taking life insurance policies out on their mortgage holders.
Damn.
Yeah.
They was hoeing people.
Yeah, life insurance policies out on their mortgage holders. They were like rewriting a lot of loans and things like that. Dang. So they actually had to go through a whole rebranding. I never recommend Wells Fargo.
Dang.
Yeah.
What would you say about American Express?
American Express is really good. Never charge off on them. They will sue you.
Yeah.
They will sue you.
I heard that American Express has a lot of benefits. They'll have you'll be able to finance something for 6 or 12 months interest free, or I think they say that the one that has the 495 annual fee, you get 15x points or something like that. I think whenever I was looking through all the benefits that it looked like it has a lot of benefits, but it seems like the $300, $400, $500 annual fee is pretty expensive. However, if you're using that card on every single transaction, it's probably worth it. If you have a lot of expenses and you're just using that card,
because you're getting the savings. I would say I recommend American Express for someone that is really established, someone who travels a lot, someone who knows how to, funnel their credit. There are certain models where some people pay all of their bills on credit, so they can continue to build their credit and pay their credit off. If you're someone that's really, really disciplined, that will work for you.
What percent of people in the U.S. do you think they're using credit cards the wrong way as far as using them to make payments and get in debt?
Oh, man, probably I would have to say over 75%.
I was gonna say 70. But you said over 75.
Over 75%. If you look at our national debt ratio, especially since interest rates have changed, and especially our generation, getting out of college, and we're some people. When you ask me the question, student loans blessing or curse, I feel like it really depends on what career you're going into. Because if you're going to and I've heard like some crazy stuff. Like I'm gonna go to a university that's gonna be like 60,000 a year for like a health science degree. Go to community college. Like,
Yeah, you know.
go somewhere local. But if you're doing something that you know is gonna pay off, you've got to weigh the investment. You can't go just to go.
Yeah.
But I feel like a lot of our generation is experiencing that with debt because, you know, a lot of our parents, especially minorities, go to school, make a better life for yourself. This is the way to do it. But I don't think really anyone told us, hey, this is what you should go to school for.
Yeah.
This is what you should not go to school for.
Yeah, you're right. You're right.
Inflation, we didn't account for inflation.
Nope.
So, back then, 80,000, 100,000 was a lot of money. I was just looking at statistics recently. The average cost of living for a single person in the city of Houston is anywhere between 75 and 85,000, and that's almost just to get by essentially with inflation. Be able to save. So when you're going to school, you're coming out, you're making 60,000, especially if you have no experience.
Yeah. No, it's pretty hard. Yeah, that stuff is with inflation. It really messed up everything. But no, you're right. A lot of people, they get out and they make a certain amount of money, and they still have to pay off their loans too. Like you mentioned, community college. The way I did it was right after high school, I went to a Lone Star. I went like the more affordable route. You went to Lone Star too?
Yeah, I went to Lone Star for a year before I moved, and then I went to community college where I moved. Then they had a university center, and that's how I.
You were able to transfer your credits?
Yeah.
Oh, okay.
Yeah. Well, I think I ended up taking probably like a year that I didn't need.
I see.
But yeah.
Yeah, I did Lone Star, and I minored in accounting there, and then I transferred to University of Houston downtown. But financial aid helped me out through the whole way. I'm blessed with that. I did have to pay out of pocket, like sometimes a semester, but it wasn't like nothing compared to what I would have paid, out of pocket.
Same.
I didn't have to take loans out, Yeah.
Oh, that's a blessing. Yeah. That's a blessing.
Did you have to take some out?
I did.
Oh, okay.
I did. And that actually really sucked because both of my parents came from single parent households.
I see.
Everyone that they knew that went to college from scholarships.
Yeah.
Or they went to college on grants. So when my parents were preparing me for college, they were like, hey, just fill out your FAFSA, everything will be fine. But because my parents were still married, I had both parents.
Yeah.
The way they look at it is your parents should be able to take a mortgage out on their house. They should be able to finance you to go to school. And I never really felt like my parents owed me that.
Yeah.
So I did get some grants, but I think that that first year, I think that I had to pay out of pocket. Like my parents had to help me pay out of pocket because the funding was low. Now after I got on my own a bit, and that's another thing. They consider your parents' income unless you're emancipated until you're 25, which is crazy because if you're someone that's first gen, I worked 2 jobs and went to school most of the time.
Yeah.
And I'm like, why y'all not going off of my little crappy income?
Yeah. I see what you mean.
Yeah.
No, yeah, that's crazy. Financial aid always helped me out. Every time I would submit an application, I was always scared that they were going to deny me, but they never did. And whenever I started, working in sales, they would always ask you, what's your income this year now, right? And then I had to put it was a little over 100K because that's what I was getting. But I was like, man, should I lie to them? But I was like, no, I can't. You know what I mean?
They see it all.
Yeah. So I put it in there, and then I also put my mom's income. And I was like, bro, if I put this, they definitely gonna deny me. But nah, I don't know what else they look at, but they still approve me. I only had to pay $300 out of pocket out of $4,000. You know what I mean? And I was just like, oh, it's kind of confusing. I don't know much information as far as what they look at, as far as the background and all that. But it's at the end of the day, there's also a lot of people that don't even try to apply.
Yeah.
And I think that's a huge mistake. I know a lot of people will feel like, nah, I'm not gonna get it. Nah, a lot of people get it. You know
right.
What I mean?
Yeah, and I would say that too. I took a break. I took a break from school around the time that I moved back to Houston, so about 4 years ago now. And I was like, let me get situated and stuff like that. I'll go back. And I started going back at the beginning of this year. Like, now I haven't had any problems with financing, but also it's because they go off of my income. Like, my income is good, but and that kind of what surprised me too.
Yeah.
But I definitely would agree with you on that. Like, don't knock it till you try it. And then also what I'm noticing is companies are a lot more into experience too.
Yeah.
So like having the experience, like I'm noticing that like having the degree isn't just enough, but like those of us who work our way through school tend to be a little bit more successful because we're coming with on the job skill sets.
Yeah.
And so also like certifications and training programs could be just as lucrative as getting a degree if you got the experience.
Yeah, I see.
And you can use financial aid for a lot of those too.
Yeah. What do you think credit repair is? Why do you think credit repair is more than just fixing numbers? What's the like emotional side of it, you would say?
The emotional side of it, it's always attached to something. Typically, anytime that I've had someone as a credit repair client in a corporate space or a client that I've taken on my own, they're going through some type of transition in there, some type of goal, and there's always emotions that are going to be attached to that. And it's funny because sometimes I inadvertently become a therapist.
Oh yeah,
like,
I bet.
yeah. My clients don't just talk to me. I'm really big on building those relationships, so they don't just talk to me about building their credit. They talk to me about their life, and I think sometimes it's because there's this culture of if you have bad credit, you're a crappy person.
Yeah.
And it's something that I really despise because life happens. At some point, everyone will have bad credit unless they have access to money trees.
Yeah, I see.
Whether it's, you had good credit, you got the house, you got the family, you got the job, but things happen. You might have a kid, you've got unexpected medical expenses, you have things that come up, and that affects our income.
Yeah.
That in turn affects our credit. And so, and also I will say, for people who sometimes feel bad about having bad credit, loan officers have the worst credit.
I never heard that before, but that's interesting.
If you work in the credit industry, people that work at banks and things like that. And it's funny because there used to be this thing of like, you have to have good credit to work in banks and stuff like that. They have the worst credit. And it actually really irritates me because they treat people really poorly. Like, oh, you have horrible credit, I don't want to deal with you. But some of the people that have had the worst credit are people that work in the financial field.
That's crazy, huh? Like, damn, you what you doing working there? It's like, I mean, I guess the ones that do have bad credit and they're in that field, I guess they can probably teach the people what to do and not to do. So maybe they have some. But yeah, actually, I would think that the people that would the companies that would hire them, they would probably check like their credit to see if they have good, to be able to work in that space.
Some of them do, but not all of them do. Especially when you get into like community loan centers and stuff like that, not as much.
I see. Talking about situations where things can happen. Do you tend to have a couple clients that go through divorces that kind of get in the mix with that?
That's one of the biggest causes of bad credit.
I see.
Biggest causes of bad credit, divorces, and unfortunately, like a spouse passing. Those are very emotional situations.
Yeah.
And I think divorces tend to be a little bit worse because they are so drawn out. Yeah, they're so drawn out. So like this person was your partner, you guys did everything together legally and financially, and that person is still making decisions that affect you even though you no longer live a life with them, and it's very unfortunate. You
feel like those are the ones that you usually have to become like therapists with?
Oh man, yeah.
It'd be like, nah, he wasn't shit, he was cheating on me. You're like, oh man.
I have had like talk about like the emotional depthness of it, and it's funny because I do a disclaimer like to the people around me that care about me, because a lot of people feel like you work with credit. Most of the time, I work from home, right? And it's like that's a really easy job.
Yeah.
I have had people call me and say, I want to commit suicide today.
That's crazy.
I've had, people call me just, they have no one else to talk to, no one else to lean on. It's a bad day today. They're hysterical. I really feel like a horrible person today. And those days are hard for me. I had to learn. I think that I've maybe over the last 2 years just kind of mastered how to do it a little bit more, but I've had to learn not to wear the heart of people because I have a passion for people.
Yeah.
And so like I would take my problems home, like I would worry about my clients. And in a corporate space, the largest books that I carried was about 450 to 500 clients.
Yeah.
So when even if you have 50% of those people that you're talking to that are in a really bad situation, month in and month out, it's really heavy.
I see. I guess the last kind of question I wanted to get into, because I know people tend to want to know, when they want to get in a specific career, if they want to get into credit repair, what do you think the pay rate is? Like if somebody wants to start doing that, does it depend on what company they work for, or if they do it by themselves? How many clientele do they need? What in the money side?
So it can range. It can range greatly. I'll be honest. It really depends on if you're working for a corporate company. It really depends on who you work for and what side of the business that you're on. There are people that work in this side of the business that they coach. There are people on that side of the business that are essentially in sales. Yeah. I don't like to call it sales because that sounds so like loud to me, but they're in sales. They work the enrollment end of it. They work off commission, so they're leading the horses to the water per se. They make really good money. And then there are people on the settlement side of it. So like the legal side of it. So they're the ones that help facilitate settlement arrangements. When they sue, they make pretty good money too. I've been really blessed. In a corporate space, there wasn't a year that I didn't get a raise. Mm-hmm. But when I started, I was making maybe about $40,000 a year.
Okay.
But what I will say is, the more proficient you become, the more money you will make. For me, I learned that my niche was explaining complex things to people in a way that they can understand.
Yeah.
That made me the top dog in where I was. Then also there's the independent route, which I do that too. And you can make a lot of money just depending on how you want to scale and how you want to run your business. There are some people that are in the credit repair. Yeah. They are more on the content side of it. They make money that way. They have their digital products. They make money that way. There are some people that are going to take on clients. They're in a monthly structure, or they charge a flat fee. It's really just about how you want to run it. But in order for you to do it, I would say you want to become an expert at it. You want to not do it just because you want to make money, but you want to do it because you enjoy learning about it and you enjoy teaching.
Yeah. Okay. I got you. It's pretty it's pretty far. You can make this amount, but you can make like 4 times that. Like, it just depends on like.
So, for instance, like I could do a fraction of the work that I do in a corporate space.
Yes.
Take way less clients and make the same thing that I was making salary.
I see. Yeah, I could definitely see that. A lot of those companies, man, they take a lot of that money commission. I know what you mean, but that's usually how it goes. You know what I mean? Once you work for like a corporate, but that's good. like how you were saying you had like a plan on getting you got your real estate license, and then you could do both at the same time, and then you have like
Yeah.
your own clientele, and then you get paid more instead of working for
And
the corporate.
that's a big goal of mine. Like if you go to my Facebook page, like really on anything that I'm putting out, a goal for me is to make good credit and financial freedom and fortitude available for everyone.
Yeah,
And I think it's one of those things that, like, you know, in a corporate space, they're really about the money.
yeah,
Um, Even me running my own business, I make it affordable,
yeah,
you know, and I'm constantly thinking of ways to put information out there for clients, people that might not be able to afford to meet with me face to face every month, to have
yeah,
me actually touching their credit. That's really, really important to me because that plays a role into our economy and so many other things. But like also, like, I just want people to feel good about themselves and where they
yeah.
are.
I got you. I got you. Well, sounds good. I do want to say thank you very much for all the information. A lot of good information. What would you say to a viewer that is watching this and wants to get into that space? What would be some words of motivation to them if they want to get into that space?
Words of motivation. Fall in love with it. Make it your love. Understand that there is a lot out there when it comes to credit. The biggest thing that I say is credit repair, whether you're repairing your credit or you're repairing someone else's credit, whether you are working on your own finances or you're teaching someone to work on, you know, their finances, it's like a diet, right? So me and him, we could go on the same workout plan, we could eat the same thing, we could drink the same amount of water for the same amount of time. Maybe he gains 20 pounds of
Yeah,
muscle and I only gain 10. And it's because our bodies are unique. We need different nutrition. So understanding what you need or what your clients need, understanding how to give that to them, and understand that you might be proficient in certain spaces and it's okay not to be proficient in every single space,
mm-hmm.
but become an expert in your space. Um, and don't let anybody make you second guess that.
Gotcha, gotcha. I appreciate it very much. Do you want to give a shout out to your Facebook, Instagram, all your social media platforms, just in case they want to reach out?
Yeah, so you can follow me on Instagram, _the J-Way, or Facebook, Next Level Credit Solutions, Wealth and Credit Solutions, or just Jordan Garrett on Facebook. Feel free to hit me up. I'm happy to help.
Sounds good. Thank y'all very much for watching. If y'all have any questions and you want to reach out to me or you want to reach out to Jordan right here, please reach out. But stay tuned. Make sure to like, comment, subscribe. Stay tuned. Thank you very much.
Thank you guys. Be blessed.